archive.tradersway.com. If you miss a session, just go ahead and log into your back office, and the videos will be there for you. So if you can't catch us live, it's a valuable resource. Today is Monday, February 9th, 2015. My name is Wayne McDonald, Chief FX Market Strategist for TradersWay.com. We do these sessions Monday through Thursday, 7:30 a.m. New York time, which is also approximately London lunch. Today is a Monday, therefore we are going to plan our week. We will review the Commitment of Traders report. We will go through the calendar looking for event risk, and if time permits, we'll go through some charts and do some technical analysis. How does that sound? If you're in the live room, please type in what currency you'd like me to cover if I happen to get enough time, and we'll get this party started. Oops. There we go. Hey, remember, trading and investing is risky business, not appropriate for everyone. Even if you're stellar yesterday, your past performance does not predict future results. Therefore, A, stay humble, and B, don't risk money you cannot afford to lose. Okay, we got some requests. If we can get keys, Aussie Dollar, Aussie, yeah, Aussie Dollar, lots of Aussies, huh? Did you guys gap fill? I guess let's do that one quickly. I know I'm supposed to do the fundamentals right off the bat. Let's go to the Aussie Dollar. So we gapped. So a typical gap strategy is to fill the gap, right? There we go. Boy, what chart am I going to put this? I'm looking at it on an hour on my other trading PC, so let's do it here. Let's do it on an hourly chart, and then there's a gap. You know what? Maybe it's even better on a 50. Back out. Okay, see the gap there? Insert shapes ellipse. Keys my ellipse. Okay, there's the gap. Typical gap trading, and by the way, gaps in Forex only occur, or should only occur, at the open of the market on Monday. So there's Friday's close, there's Monday open. You can see there's a big gap. The traditional way to trade a gap is to look for the reversal pattern. So it comes up, closes the gap. So at some point, let's say down in here, you would expect it to come in, fill this gap. And then generally speaking, you want to trend trade, right? Looking for the next lower low. The way I describe it is fill the gap, then continue mission. In this case, it hasn't continued mission, but whatever. Maybe it has here, right? You just take the larger fractal, call it a 618 and be done with it. Okay, that's typical gap trading. And you're only going to see it on a Monday morning. Does anybody here not know gap trading strategies? Like you just never done it before, never even seen it? Come on, you can tell Uncle Wayne. How do you foresee a gap? You never really do. You know, the best way to foresee a gap would be gigantic news over the weekend, or a very important non-farm payrolls like we had on Friday. Well, Asia was sleeping, right? So then, you know, everyone in Asia the next day, they're reading newspapers, drinking tea, and they're like, wow, you see NFP? Hey! Right? So Monday morning, they need to adjust their portfolios based on this new information that occurred while they were sleeping over the weekend, right? So, so perhaps that's what the gap is, right? YJ like that one, eh? Hey! Funny thing, when you're in Japan and you're talking, doing a business negotiation, very often that you'll get hi, and you think, yeah, he totally understands and agrees. Oh, he understands. He probably doesn't agree. Does that make sense? Hi. Oh, this guy is totally on board. Good luck closing that deal. So, anyways, yeah. So if there was very, very important news late on Friday or over the weekend, you'll probably get it. It's more though, however, it's if the trade, if the gap appears, you have the opportunity to trade it. Maybe it's a good time for a binary. Hey, if the gap fills even a little bit, right, you're going to get paid on a binary strategy, right? So again, another benefit for being a trader's way, where you can trade it without worrying about the volatility. So if it occurs, you simply fill the gap. So again, if there's lots of news, or maybe it's Monday after non-farm payrolls, you can anticipate that there might be a gap, and you just sit there and wait. And that's traditionally what it is. So for me, it's like 4 or 5 o'clock in the afternoon on Sunday. My charts kick open, and very often there's gaps. If they are, I know what to do. Let me give you another example, then we'll move on. Many years ago, I was trading, and I was in like 20 trades, typical me, right? And something occurred over the weekend. I can't remember what it was, but I anticipated that, oh my gosh, that's going to move the market. Okay, so I'm sitting there at my computer, waiting to open, and I'm anticipating that the market's going to move in my favor, and I'm like, oh man, I'm going to nail this one. I'm going to make like 1,000 pips, right? And I already had my stops locked in. I wasn't trading foolishly or anything like that. I had my stops like 100 pips away or something like that, right? So I'm all locked and loaded. Everything's good. And sure enough, the market gapped, but the market gapped against me, not for me. And it was a big news. I can't remember what it was, but the market gapped 300 pips in the opposite direction that I wanted the market to go. Now, all Forex brokers are the same, right? In that case, if the market gaps, price never hit your stop loss. So I was still in the market with stop losses above price, which is not a good thing to have if you're actually losing money. So all of a sudden, I was down like 200 or 300 pips on a lot of these trades. And that's when you just want to panic. Okay, that's just when you want to panic, because I wasn't stopped out because the market never hit my stop. It just jumped over it, right? Which is, it doesn't happen a lot, but it can happen. So anyways, I'm sitting there and I'm down many hundreds of pips per trade. It's fortune, right? I'm like, whoa. And I want to panic, and I want to go, and then I realize it's a gap. If I can stay calm and stay composed, I can at least benefit from the gap fill. It might not be enough to cover my losses, but I don't need to take a bloodbath now because I'm panicking. And so I hung with it. Now, I watched it minute by minute over the course of maybe an hour. So it wasn't like I just, gave up away. No, I watched every single candle of that hour. It took, to me, it was a lifetime. And I recovered about, I don't know, 50 or 60% of the losses. Okay, not because hope was a strategy, not because I panicked or fainted or something, but simply because I knew how to trade a gap. And so it gapped against me. The gap's going to fill. I got most of my losses back and took a punch on the chin, but it wasn't a knockout. And walked away having stayed calm, stayed focused, and technical analysis the way I was supposed to. It was, it wasn't a good day because I figured I was going to be up a lot of money. Instead, I lost. But anyways, I traded the gap, which is the message, right? All right. Now, luckily, those things don't, those situations don't occur often. Hey, how about that Swiss franc the other day, huh? Nightmare, right? But that can happen over the weekend, and therefore that in of itself is an event risk. You know if a gap's going to occur, when it's going to occur, right? As soon as the market's open on Monday. So it's an event risk. And so Friday afternoon, you have to ask yourself, do I feel comfortable being in these positions over the weekend? Should I move my stop? Is my stop close enough? Should I just get out? The real question, and there's not a consistent answer to it. Okay? It really depends. Okay? So, for example, I was short quite a few Japanese yen pairs on Friday. Short the Japanese yen, long Japanese yen pairs. On Friday, did very well. What do you do now after non-farm payrolls hold? Maybe it'll continue going. Very often, I don't like maybe. So if you can get yourself near a psychological level or a pivot profit zone, you take the money and run. What's the ultimate pivot profit zone for a pair? And we'll never get to the fundamentals, right? R2. Thank you, YJ. Okay. Um, so let's take a look at this. Okay. Where should you get out on a Friday afternoon? How about right there? WWWD. What would Wayne do? Mm-hmm. Uh-huh. Mm-hmm. Take a big guess. Yeah. Anybody that knows me knows that's where you get out. All right. So anyways, easy peasy, right? All right, so let's do the commitment of traders report. This is Euro. Short positions increased, long positions decreased. Short positions, long positions. The market is net short and week over week is more net short. Here's the trend in net. Okay, good. Okay, that's good. No reason to change our fundamental bias. Remember our conversation early last week that because of non-farm payrolls, I was expecting profit taking and Euro USD would go up. So it went up for what, 3 or 4 days? And if you attended these strategy sessions, we talked about it. I'm like, hey, fine, let it go up. I don't think there's any reason for the trend to change, right? You guys remember talking about it? We looked at the commitment of traders report. Just seems like the market's very net, heavily net short. Some profit taking, some unwind, some rebalancing. We got the event risk, and it's going up, but there's no fundamental reason for a change, right? So we could talk about it quite casually that the Euro USD is going to continue in the downtrend, right? How many people can confirm that? That has been the topic of our conversation most of last week. Euro USD is going up. There's no change of trend. That you shouldn't panic. You should stay focused. If you're a bear, simply find resistance and sell it. Right? Just very calm, just very factual. And if you're a bear, you want to see green candles. You don't mind 2 or 3 days of the Euro USD going. And here we are now. Okay? Apparently the double top at the monthly central pivot point was just too much. Look at that, huh? So up, 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 down, 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 down. Okay? Stay calm, don't panic. So dollar strong too. Nice. Okay, so now the world is right as rain. The market's doing what it should fundamentally be doing. Good. And what do you do if the market is fundamentally one way and technically the other? That's where, again, you use binary options. So if you're short, if you want to be short Euro USD, but the market on your time frame is technically bullish, but you're fundamentally bearish, well, sell high at resistance, right? And then if you want, since technically it's not bearish, hedge your bearish trade with a binary option by going long. And if the market goes up, you lose money on the cash, you make money on the derivative, and it offsets almost half your cost. Huh. Nothing ventured, nothing gained. Right? You just don't want to do it with risk. So anyways, everything here is good as gold, moving along in the proper direction. Once again, there are more people, these are more short positions in the market than before. Remember, they're reportable short positions. They're large. I forget what it is. What is it, 100 million to have a reportable position? You know, 100 million here, 100 million there. Pretty soon it adds up to real money. So more euro short positions than we used to have and less long positions. Nice. Good. Okay. Pig. Now, I think this is interesting. Less people short. Is anybody long? No, less people long, but much less people short. Does that make sense? The double positive, double negative positive. Just look at the black line. Big jump upward. Okay. It's not bullish. We can see here, it's not because the bulls are getting in, but the bears got out significantly. Now, it's still bearish, obviously. We're still net short, but what a drop in British pound short positions. Nice. Okay. That's significant. So, for example, do you want to turn bullish or look for bullish opportunities on the pound? Boop, 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 boom. Boop, 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 boom. Boop, 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 boop. There we go. All right. Then set it up. There's an old fib in there. Come on, Bubba. Okay. Okay. Extend the support out. Okay, and then I think we want to measure that one in there. Let me zoom in so you can see it a little better. And then we got a support up here. There's a lot going on, isn't there? There's fibs, there's price action. Big old 382 right around 79.50. The world might want to keep this above 80. And notice that 80 is essentially a couple of things. Monthly central pivot. Okay. And then you got a 4-hour 21. So I think a lot of people are going to look for it to do this. Next level is just below that. That's the weekly central. And it's price action. And it's a 382. So anywhere between 80, so my real support is 179.96, okay, all the way down to, let's just call it 79, what is it, 50? Okay, those are the areas that you'd want to look to take a shot. Got a little bit of divergence here, so you got to be careful. Okay, it could come down all the way down to even here maybe over time, so we'll have to see. If you're going to take this top and connect a similar slope, to create a channel. So anyways, your job is, if you're a bull on the pound yen, find support, wait for price to come to support, and then look for weakness in the down move, and prepare to buy it when it's oversold at support. Okay? And you could back that up saying it's because there are less people shorting the British pound than there used to. So less short maybe turns positive. Never know. Okay, hope I didn't lose you there. Yen. How many people here have never gone through the Commitment of Traders report? Except, hanging out with me. Like you just before these sessions, you just never really went through them, right? John says that. Do you find that interesting and a useful thing to be doing? Yeah, it's cool, right? I mean, again, this is not market sentiment. This isn't a survey of how hedge fund managers feel about the market. This is reportable large positions, right? This is large positions reported to the CFTC. By rule of law, they have to report it. So it's real money. Right? Isn't it? I think that's the interesting part. I don't care about how people feel or even what they think. All right? I care about where they put their money and how they behave, right? So anyways, here's the yen. Less net short. Now remember, this is as of Tuesday of last week. The data was made publicly available Friday afternoon, so it's as recent as we can get. But okay, less people. There are less people at the moment, and nobody long. Very, very steady on that, right? So nobody's buying the Japanese yen. Good. There are still less people short. So according to this, the big up move has not happened. But this is, up the Japanese yen price dollars, right? So the data suggests as of Tuesday that the big USD yen move hasn't occurred yet, but this is pre-NFP. Okay, so the next time we review Commitment of Traders data, it will include today and tomorrow. So what happens today or tomorrow should be interesting. Do we continue with yen weakness? Will more people short the Japanese yen? It could be interesting. It could be green light, game on. I still have my concerns about repatriation flows that occur seasonality wise. But we've been waiting for this thing to go up, the USD yen, and on non-farm payrolls it did go up, and it did go up off of support. So not quite ready to drink the Kool-Aid for USD yen going all the way up to, let's say, 125. But it could. At least it's going in the right direction for the right reason. So maybe But we'll see. I'm still pretty conservative. We'll see. Um, okay, we'll see. I'm still buying USD Japanese yen when I can, um, but I'm also jamming my stop. Right. All right. Let's see. Swissy, forget about it. I don't even want to look at it. All right. Aussie, more people short, no change in people being long. Now that is helpful information. But I don't like grape. I like raspberry. Shut up. Drink the Kool-Aid. Um, yeah. This, I find it interesting. So you can see here the number of short positions has increased. Good. No change in bullish positions. Therefore, the market is net short and week over week more net short than it was before. Good. Good. So once again, any reason to be long Aussie dollar? No, not according to this data. Okay. Kiwi. Okay. This currency, see how close it is to the water line, to the zero line? We're just barely short this. Just barely. Well, the other currency pairs are, way long, way bullish or way bearish. This is just a little bit bearish. Interesting. Less people short, less people long, less people doing anything. But week over week, more bearish, but not by much. So still really neutral. Okay. Big drop in price, but less people in the trade. Okay. Actually, even though price dropped dramatically over the last 2 weeks, there's actually less people short and less people long. So just more people going neutral, which is interesting. Maybe one day this is the first one that can turn bullish because the other ones are so much more bearish. I think people are waiting. And if you were going to be long, something, it might as well be long Kiwi. It's not as tied to the global market as some other currencies like Aussie, right? Which is directly related to China. New Zealand's not that way, and also it pays more yield than you can get anywhere else in the free world. So, you know, could be a good one to slowly start building up. But right now, technically and fundamentally, based on this data, still no reason to be long. But I don't know, maybe no reason to be short, and that's why you see the market neutral. Might be worth the risk if you can catch the yield, right? All right. And here we are, kitty cat. Okay, USD CAD price jumped up dramatically. You can see that the red line here is price, USD CAD, and very little change in positions. Even though the USD CAD, which means the CAD lost a lot of value, well, if you look at it with this data, the CAD didn't lose lots of value, but the US dollar did gain a lot of strength. Okay, but very little change in positions. So maybe the retail market is shorting the CAD, but not the professional market. Okay. So it makes me wonder, are people going to start trading USD CAD, or sorry, not USD CAD, because you don't want to get in front of that raging bull US dollar, but maybe a CAD yen if oil prices can stay above 50 indefinitely. You know, if we can get to, I don't know, $75 barrel oil for a couple of years, that's enough for Canada. How did I read that? All right. Okay, so let's look at it. Okay, the red line here is price of the USD CAD, right? The CAD priced in dollars, right? So anyways, that's price. It jumped from just a few weeks ago, we were at 120. Now we're, 125, 126, right? It was higher than it was now, and right now we're at 125. So we were way up there, 127, right? All right. So there's two parts to this, USD and CAD. Okay. So one or two things occurred, right? Um, I guess one of three things. Either the US dollar gained a lot of strength, or the Canadian dollar lost a lot of value, or both. Okay, so now we look at the positions. Okay, those are the positions over the last, that's about 6 weeks. Here, let me use a highlighter instead. So yellow highlighter. Okay, all right. See these positions over that's like a couple of months, more than a couple of months worth of data. Okay, those are the short positions. So for the Canadian dollar, was there a dramatic increase in short positions? Actually, there was a slight decrease, just slight, like, two shakes of a lamb's tail. Boop, right? Just, there's actually less people short. So what? And then you look at here, there's less people long as well. So what happened in the equation? Did the USD Canadian dollar gain value? No, it actually would have lost value because there's less people long. Did everybody short it? No, nobody did anything. So then what moved the USD CAD up so dramatically? Well, it must have been the US dollar through a process of elimination. Much more US dollar strength than Canadian dollar weakness. Okay? Deduction, my dear Watson. Quite right. Quite right. And I guess that's it. So let's take a look at the calendar now. Un momento, por favor. Muy bien. Is there a method to follow in order to get a... I'm not sure what you're asking. Okay. Aussie business confidence, maybe a little scalp there. China CPI, I don't know. Do you guys think Chinese inflation data is important? On Lewis's question, okay, is there any method? Yes, you have to follow macroeconomics of every major economy in the world, and more importantly, the central bank's response to their market conditions. This is why you need to follow Chinese inflation data, right? How do you know it? Well, you either watch for it to come out. That's why we're going through the calendar. You're either there when it happens, or you pay attention when it's reported. So maybe the next day. But you should know what's going on in Japan, in China, in Australia, in New Zealand, in Canada, in the United States. Did I say Japan? Japan, the United Kingdom, the Eurozone. And then you can take it out even farther than that. You should know all of this. That's all. And more importantly, consider it like a soap opera. Like a lot of people are like, I can't I can't keep track of all that information. It's too hard, right? And then you go to a party, and you're like, hey, do you watch Sons of Anarchy? Oh, I've watched every episode. Oh, and I know this character and that character. Remember that episode and this, that, and the other thing. Like, really? Do you understand that you've wasted 62 hours of your life watching that TV show? What else do you watch? Oh, well, I watch this show and I watch that show and that. Holy crap. Right? You watched Walking Dead? Oh, I've seen every episode of Walking Dead. How about The Blacklist? You watch? Oh, I love The Blacklist. Like, really? Holy crap. You wasted hundreds of hours in front of the TV. But, what's the inflation rate in Canada? Oh, well, forget about it. I can't possibly remember that. Yeah, Breaking Bad. Only 400 episodes. Oh, I've watched it twice. It's the greatest TV show in the whole world. Yeah, get a job. All right. So, anyways. So, yeah, that's how you do it. You become a master of your domain. All right. Some people know football stats. You know central banking stats. All right. So, UK industrial production. Okay, fine. It's not the most important thing these days, I think, but we're trying to see where the health of their economy is. It was quite good for a year or so, and then there's been a lot of pullback. You're going to see, factory orders and stuff pick up if people are spending money, and okay, fine. Yeah, it's fine. Yeah, I would watch it. I would pay attention to it. Could be tradable, could be scalpable. Okay, and then Aussie jobs. Oh yeah, it's one of my favorite reports. There's definitely a scalp there. Lewis, how to get all that news? You can hang out with me every day if you want. Yes, I do use NewsTrader Pro. That's one piece, one tool, one database that I use, NewsTrader Pro. I have a custom version, and I gave a lot of feedback to the company so that they could actually, so that they can include information I thought was important to a Forex trader, and so on and so forth. But, Lewis, you can also hang with me every day and ask questions, and I'm happy to help. As long as you fund a live account with Traders Way, everyone will be happy. Okay, so like for historical data, I do use NewsTrader Pro. For live data, I use TradeTheNews.com, so on and so forth. Lots of great info. All right, so Aussie jobs report, did you write that down? I mean, there's going to be a scalp there, right? So, yeah. So there's 2 days in a row with scalpable Aussie news. Also, Chinese industrial or Chinese inflation data. Do you think you could start the beginning of the week trading the Asian section? Do you think this is something that is plausible? Because sometimes you're like, I can't make it to Asia. It's the middle of the night. Blah 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 blah. All right. Well, maybe you do. Maybe this is worth staying up. You understand why we're through the calendar here? There's an opportunity to make money. You know exactly when it's going to happen. So you could plan for it. Put it on your calendar. Maybe you trade Asia, Tuesday, Wednesday, and that's it for the whole week, right? Anyways. Okay, so Aussie jobs report, big thumbs up. I love trading that report. I have all kinds of memories trading that report. Good. And then what? Carney speaks. What? Bank of England quarterly inflation report. I don't know. Do you think that's important? Could be a rabbit. Could be. Yeah. Another great opportunity to be trading the British pound, especially since we're looking at commitment to traders report. There has been a slight but significant change in portable positions long British pound, or at least less short. I forget which one it was. British pound. There might be just the smallest beginning of change in direction for British pound. We don't know. And you need 2 or 3 weeks of data to put a trend together. But maybe, just maybe, the British pound starts a comeback. So good K industrial production. Okay, fine. Follow that up by good remarks from Carney. What does he have to say? There's reason to consider maybe one day possibly raising interest rates. Boom. British pound strong. Right? That's it. Boom. Strong rest of the year. We're already, right? We're already seeing maybe the possibility of large positions changing in favor of the British pound. It's interesting. It might happen. So pay attention. Put it on your calendar. Be there. Be square. Okay. Retail sales. That's pretty important to the U.S. economy. It's a consumer economy. Right? Are people getting jobs? Well, why did they get jobs? Well, quantitative easing gave money to banks. Banks then lent it out. Businesses started. They bought inventory, so they had to, therefore factory orders had to go up, which means factories had to be tooled, which means they needed to buy the raw material to make the widgets and the gadgets, and that had to be delivered. So, delivery truck guys and then factory workers and machinists, all that together, they start actually producing product, and then they got to ship it to the store. So UPS and FedEx and all that kind of stuff, and just all of a sudden, all that money eventually trickles down to Monday Night Football guys, right? The average Joe with wing sauce on his face, right? Everybody suddenly got some of that QE money. So are they spending it at retail? are they going shopping? That's going to be important because, again, that means that the money that was printed at the Fed and given to the banks, it's made its way down to the average Joe, and they're going out and, buying wings and beer. All right, good. Unemployment claims, fine. We got a trend there. It's been fine. Let's just continue trend. Okay. Obviously, you don't want people filing unemployment claims. Then Governor Stevens comes out and says what? Ideally, he says the Aussie dollar is worth 65. More, now his MO is he's a liar. Because last time he told us, when we were in the mid 90s, as far as the value of the Aussie dollar versus US dollar, he said it was worth 75, right? No, sorry, 85. Was it? No, 75. So it drops like a ton of bricks over time, and we get there, and he was supposed to follow it up, and he didn't, and he left us hanging for about 6 months. And the thing slowly started going up in value because he talked it down and then he didn't follow it up and left us hanging. Oh, Eduardo asks, Chinese data affect the yen? Yes, it does. Okay, but more importantly, the Aussie dollar. So watch Aussie versus US dollar. If it weakens the Aussie. If it strengthens the Aussie, look for Aussie yen long. Okay? Yeah. You get it again, guys? By the way, this is why you ask questions, because I think that's obvious, but I don't know. I've been doing this for so long. I don't know what you know, and I don't know what you don't know, so I'm here to help. So ask, and I'm happy to help. So if Chinese CPI is good, you might be long Aussie yen. If Chinese CPI data is bad, you might be short Aussie USD. Okay? Right. So yeah, RBA. So Governor Stevens, he said that the Aussie dollar was worth 75. Good. So we dropped it down to 75. Great. So he should come out and say what? That that the recent moves in the foreign exchange are logical and good, but historically, the Aussie dollar is still overvalued. Blah 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 blah. Okay, and that interest rates fall even further if need be. That should drop the Aussie. Okay. Now that's what you would think he would say. If he comes out and says anything other than that, it could be incredibly disappointing. And now he has a track record of talking the talk but not walking the walk. So he could spook us out of our trades like he did last time. Okay, so be careful. Again, maybe a nice opportunity for binary option trading because then you don't get killed on the volatility. Okay, GDP out of Germany. Do we care about that? No. Couldn't give two hoots about that. Why? Eurozone GDP, right? Do I care about that? Is that Eurozone? I can't see it. Yeah. What do I care? No. Because we're doing quantitative easing. If those numbers were good, we wouldn't need quantitative easing. But we're already got that. It's already in the plan. I mean, what kind of number would those need to be for it to change the ECB's policy after already announcing quantitative easing? What is that going to come out, like 15 or 20% GDP? Right. It's just not going to happen. Who cares? If anything, if it comes out good, I don't know, maybe the euro goes up, and then we just we sell it, right? I mean, like we just crush it. Because some people on the very short end of the trading curve, right? They start buying euro because they're like, oh, look at GDP. Yeah, all right. Well, I'm going to crush you. And I look for resistance and I set up sell positions. It's my job. When the market is mispriced, I have to, you know, I don't know. It's an efficient market. I have to set the price appropriately. Okay. Canadian dollar, right? Manufacturing sales. You know what? I think those numbers are going to come out bad. So maybe Canadian dollar gains strength on the short run if oil prices stabilize, and particularly over, even $60, that would be fine. But I have a feeling that over the next few months, you're going to see some bad data out of Canada. Unemployment will go up, retail sales will go down, so on and so forth. Because they've been, negatively affected by the 70% drop in oil prices. It's a commodity country, right? There's also a lot of other things have fallen as of late, gold prices, coal prices. So Canada's great. What a beautiful country. Fantastic people. They have wheat, barley, and all that, all the grains in the world, flaxseed, all, just everything. Canola, right? Canadian low acidic oil. So you got all the grains, enough to probably feed most of the planet. More fresh water than anywhere else on Earth, right? Timber forever. Uranium, gold, diamonds, oil, nickel, potash, right? It goes on. Beef, just unbelievable amounts of natural resources. But when commodities are generally in a bear market, which they have been as of late, wow, does that affect a commodity producing country? Okay. So here we are. We were at 105. Now we're at 125. And the U.S. Canadian dollar, this for decades was at 2.00. We're at 1.25. There's a long ways down. The rabbit hole is deep. Let's just say. So the Canadian dollar can fall a long ways. But hopefully all of this is just a glitch in the matrix. And, over the next 6 months to a year, commodity prices in general rebound. And the Canadian dollar will be back in good shape again. So it really comes down to what you think the global macroeconomics indicate and when and where the Canadian dollar will rebound. And at least its largest trading partner, the United States, is in much better shape than it used to be. Okay? And then some consumer sentiment. I don't care about that at all. Never did. All right. How do you feel? I don't care how you feel. I care about what you spend, right? So I'd rather watch REIT sales than consumer sentiment. But that's just me. And this goes back to an old story of Sony was testing out a brand new product never seen before. It was called the Sony Walkman, where you could actually carry your music with you. Put a cassette tape into the little machine, put headset over your ears, and you could listen to the music. Just a radical idea. So they got a group together to test these things out, right? And videotape people watching, opening the packages and playing around with their Walkman and all that kind of stuff. It's really good. Then they handed out the questionnaire. Hey, what did you think about the product? Do you like the product? Do you like the music? What was the sound quality? Would you buy one? If you bought one, what color would you buy? And they all did this. Black, 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 black. Thank you for the survey. Thank you for sharing the feedback. Now, as a parting gift, go help yourself to a Walkman out in the lobby. So everyone leaves the room. All right, the focus group leaves the room, goes out to the lobby. There's two huge piles of Walkman, a black pile and a yellow pile. And guess what they did? They all walked over to the yellow ones, grabbed the yellow ones and left. Also minored in law. And I can tell you that one of the worst kind of witnesses you could have is an eyewitness. The one that was standing right there, watched the whole thing happen. They're almost always wrong. So I don't care what you think. I don't care about how you feel. I don't care about your sentiment. But you spend money, now I care. That is no longer an opinion, but a fact, right? And that's why I like Commitment of Traders report. Not market sentiment. It's market money, market positions. And to me, that's valuable information. That's why I like to cover it with you guys every Monday. Hey, I'm going to be here tomorrow, 7:30 in the morning, New York time, London lunch. Would you care to join me? I'll put the chairs out, get some coffee and donuts. Yeah? Sorry it took so long again today. We always end up talking. I know. Sorry. But there's our week. Okay? I think you should start with some Aussie and pound and end with euro. But Aussie and pound probably the biggest ones this week. Okay? So please open a live trading account at Traders Way. If you don't do that, these events go away. Just like that. That's how it goes. Income minus liabilities. Right? Assets minus liabilities equals net worth. So it's got to make business sense for us to continue doing this. But I love it. I'm here for you, babe. Every day. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow at tradersway.com.